All right, hello. My name's John Seguin, and most of you have been getting some charts and a few daily updates from me for a little while here. And the questions I got were, how do you read the chart? So what I really want to do is just kind of go over a little bit about what Macrograph is, give you some of my background, introduce Macrograph and the logic behind it, and I'll show you a little bit on how I use and interpret the graphs. So I really don't want to take a whole lot of your time tonight. I plan to do a few of these sort of informative webinars. So let's just get through this thing. And what I'd like to do, I imagine it's going to be kind of tough for me to answer a lot of questions. So maybe the best thing to do is take down my email address and send them to me, and I'll address your questions as we get them, because I don't really want to take a whole lot of people's time up tonight. We'll kind of get through this, and then you can go through them and hit me with whatever questions you have. So first of all, let me tell you how I started with this stuff. Is back in the summer of 1983, after graduating college, I was going to be a high school teacher and a baseball coach. And then I ended up taking a summer job at the Board of Trade as a runner, who was basically a gopher for brokers. And after a couple of months, I was hired as a phone clerk in the grain room taking orders from farmers. And eventually I was hired to quote price action and execute trades in the Treasury bond pit. Then I spent about a year and a half or so over in the S&P pit at the Mercantile Exchange doing the same thing, executing orders for clients. And then in the probably mid-'80s, 86 or so, I believe it was, volume really skyrocketed in the Treasury pits, and so I was asked to go back over to the CBOT and run a squawk box to our New York, Chicago, and London offices. And this is where I really learned how to read price action in the trading pit. I quoted bid, offer, the sizes of those, what was trading, and who was making the trades, who was buying and selling. And this was something I did all day long, staring at the pit. So I really got to learn to read price action. And it wasn't long after that I became a broker for institutional clients. And it was really a highly competitive environment. I was standing shoulder to shoulder with my competition. J.P. Morgan, Goldman Sachs was right next to me, Merrill Lynch. I mean, and everybody was using the same charting techniques. Everybody was using the same charting techniques. Because back then we didn't have computers at our desks. There was no room for that. So a lot of us did bar charting or point and figure charts, and we did this by hand. At first I learned all the standard technical tools for tracking price action. We began with studying the patterns using bar charts, point and figures, a little bit later candlesticks. And then well, like I said, most of the charting was done by hand, or we would buy chart books every week. And it seemed that most technicians were using the same tools, and very few had a unique perspective. And after computers came around, we were introduced to some more indicators like moving averages, stochastics, and then Elliott wave became real popular, Fibonacci, Gann studies, and of course MACDs. There's just so many of them out there right now. Anyway, everybody seemed to be using the same stuff, so I felt I needed a method of analysis that allowed me to stand out with a unique perspective and technically track what I was seeing in the pits. And then one day, I came across market profile while standing in line to print some charts from a computer provided by the exchange. And this is what I saw. It was a grain trader printed this stuff up, and I had never seen this stuff before. And it's market profile, and it simply organizes price action into a bell curve by assigning a letter to each 30-minute period of the day. And I had no idea what the charts revealed, but I knew of no one that was using them, so I began to chart them by hand, and then I began to research the tool. And this is just an example of one of the charts I used to do. Each one of these is a profile, you see, of the 10-year note. And it gives me a lot of information, okay? First of all, I was able to track what opens and closes were. I knew what the high volume price was. In other words, where did buyers and sellers agree most often? Initial balance is a market profile term, but it's basically what what occurred in the first hour of trading, which is also happens to be on average your high volume periods of the day, the first 2.5 hours or the first full hour. The value area, and the value area is simply a standard deviation of volume around the high volume price. I also used to track the news, because really, and I truly believe that fundamentals do move markets. I believe that that's what starts and makes the market trend, but it's technicals that we trade with. So when there was a big news item, how did that affect the price action? What happened? And as you can see in this day here on this day right here, 7/16, we got a CPI, which is a consumer price index, and industrial production. You can see how the market was right back here. We had a high volume price from the previous day, and the market just ripped away from that. So it was obviously bearish news. So the idea behind all this was that I wanted to gather as much information as I possibly could to understand the auction process. And another thing I did too, I used to, down here on the bottom, you see 11. That tells me that on average, the 10-year note was moving about 11 ticks in the first hour of the day. It was moving about 26 ticks during the day on average, and 32 if you included the day and the night. And it was moving about 2 points a week and about 4 points a month. So I was just trying to be sort of like a detective. I need to know all the facts before I can make a judgment. What market profile allows us to do is to define fair value, like I said before, define fair value, determine momentum, assume a direction, and define risk. I don't use market profile anymore, guys. I've developed a way. I don't even have the market profile service because I have the Macrographs. I break down days using bar charts. And what you're looking at here is my worksheet that I use every day to write my daily updates. Each color here is shaded, each color, so Mondays, as you see in my graphs, are always purple. Tuesdays are always orange. Wednesday's blue. Thursday, and then Friday is green. I track the first hour. I know what my value areas are. I know what my high volume prices are. This, I don't even know what you call these things. These parentheses of some sort. These things, it tells me what an average day's range is. I keep an average of what the last about 20 days ranges, so I can get an idea if I believe a high has come in or a low has come in. How far could this market travel? Now, the reason why I like market profile so much, and the reason why I built Macrograph, is because when I was working for these institutions, I started building Macrograph. I often traveled with an economist, and there was two types of traders. There were technicians and there were fundamentalists. And I think that the profiles take both schools of thought together, or put them both together, simply because what we're doing is we're tracking fair value. And fair value is made whether it's where buyers and sellers come together most often. It doesn't matter if it was because there was a fundamental reason for that or a technical reason. The point is that we know what fair is, and if I know what fair is, the movement away from that can tell me what momentum is. So I think it encompasses both schools of thought, which is another reason why I really have stuck with this tool for as long as I have. Now, before I go into a little bit about Macrograph, let me just tell you how it all came to be. As I said, I was quoting a squawk box. Excuse me a second. I was quoting a squawk box at the 30-year bond pit, and I want you to think of these two first profiles here, this one and this one. These are whole weeks. And now normally you would see the 30-year bond maybe trading in a week. It would trade in a 3, maybe even a 4-point range. And for 2 weeks, I had been sitting there quoting basically the same prices. 1 bid at 2, 500 or 200 up, 200 offered, 200 bid. Nothing's trading, 50 trade. It's offered again. You know, it's just boring. In fact, I remember playing a lot of liar's poker during that time. And then one day around 11 o'clock in the morning, Goldman Sachs came in and they bought 500 bonds right around here, right around par. And then right behind them, JP Morgan came in. They bought 1,000. Merrill Lynch bought 2,000. And the market just shot off this high volume price. And that's what these levels are right here. These are high volume prices. This is where most of the volume occurs, where the market cones out the furthest. That's where buyers and sellers agree most often. So it came to me that if I was to start making longer term bell curves, and not just look at these short-term day signals and trying to look for how much can I make in a day. Well, if the bond's moving 24 ticks a day, boy, I'm going to try and make 20 ticks. And I thought, well, wait a second. If it's moving 60 ticks or 90 ticks in a week, and at that moment in time when momentum kicked in, when capital flows took over, when big money moved the market away from fair value, what does that look like? So I started to make these longer-term charts. I decided to just start, you know how we stack up letters on the top of each other to get a daily market profile? Well, now I'm just stacking days on top of each other. And you can see here, some of these charts you're going to see are kind of old. I'm just trying to get a point across. Believe me, you're going to see up-to-date charts, and these same patterns recur in the newer patterns. It's just that this is good for explanation stuff. There's some newer ones in here. But anyway, so I decided if I'm looking at this Kellogg chart on Monday, Tuesday, Wednesday, Thursday, Friday, I'm not getting any kind of a read on momentum. But if I stack those things up and find that the fair price was right around 33.40 and the market closed above that, that's simply pure logic. Tells you, listen, buyers have control of momentum simply because they're able to keep the market above the fair price. Pure logic. And the nice thing about this, too, is what I like about, I'm looking at 2 time frames in one chart. Not only am I seeing the weekly high and low, but I'm seeing the day's highs and lows at each. But, again, the whole idea is take the same logic that I learned in a market logic school back in the middle 80s. Why wouldn't this same logic, why couldn't I apply this to a longer-term profile and come up with the same thing? So as a broker, I had to constantly be on my guard, getting calls from people all over the world and saying, what's going on in the bonds? I mean, the questions would come constantly. So, and as a broker, brevity and speed were imperative, and I had to have an opinion ready at all times. So I broke down the most common questions traders asked on a daily, even hourly basis, and came up with a trader's checklist. And subsequently, I came up with the acronym VERTEX. And what it simply is, it's an acronym to cover each element that I believe you need to have a sound trading strategy. If you know what value is, or where the fair price is, you'll also know what the energy or the momentum of the market is. And by making these bell curves, I can understand, I can define my risk. I'm sorry, I can define my risk, and that's simply what the change in momentum is. I need to know, is the market ripe to trend, or is it ready to coil? Traders always want to know, where's a good place to get in, where's a good place to get out, support and resistance, entry. And exit is not simply getting out of a trade. Once in a profitable trade, how do you hold on? How do you protect that profit? And how far, once you're in it, how far do you think it should go? And all this stuff is available by using macrographs the right way. So let's just go over Vertex. And this is just to give you an idea of why I built the charts and how I use them. First of all, value is simply a standard deviation of volume around the mean. So if our mean is the high volume price here, it's calculated that roughly 68.7, I'm not exactly sure what it is, I haven't looked at it in so long, but roughly 70% of the volume around this mean is what's called a value area. And the value area is instrumental in telling us about momentum, and it's also the biggest component that I use to define risk. It's one of the biggest. There's another one that I use that traditional market profilers don't really use. I call them sprints. It's something you would learn in a class if you took it with me, and I'll probably show you what it is in another webinar, because after I get questions, I'll probably hold another one just so we can go through those. The energy, okay, what is the energy? The energy is simply the movement away from the high volume price. So if I know what fair is and I get closes below it, or I see, I don't know, after the first hour trade, if the market really busts through a high volume price, this is telling me where the big money flows are. As a trader on the floor, you're constantly, most of them, made money counter trading or providing liquidity to the big firms. Okay, guys on the floor, they would buy it at 3 and look to sell it at 4, sell it at 4 and buy it at 3, buy it at 2, sell it at 3. They would do this hundreds and even thousands of times a day, trying to make 1-2 ticks, which was a good living. But you know what? There's no floor trading anymore. So, and there's no edge anymore. So rather than try and do that kind of counter trading, and I have no problem with mean reversion trading. In fact, I believe there's always time for mean reversion trade. But what I'm talking about is, how do you run with a good trend? How do you read capital flows, big money, when it's entered the market? And it's simply, one of the ways that I do it is simply by looking at these very high volume prices. And something I want to point out in this chart here, you see, now we're looking at a month. And down here under each chart, you see I have a color code. So you know what the first week of the month is always going to be purple. The second week, just like the Monday's always purple. The first week of the month, and January is always purple. So the first month of the year is always this color. And so is Tuesday, the first week of the month, in February, and so on and so forth. Okay. These colors, I read them sort of like letters. They give me an idea of who's controlling momentum. I can't tell you how many times you see the high or low made in the first week and a half of a month. It's just something I've noticed over the years. But honestly, what I look for here is, and I'll tell you, I look for these really, really high volume prices. And then when I see these, that's when I turn to my short-term signals that I learned as a profilist. Is my initial balance? Was there sellers involved there? Was after that first hour of trade, did this market thrust below that high volume price? Did it close below the high volume price? All these things are daily momentum indicators that I apply with a longer-term perspective. Okay? As far as risk is concerned, again, I'm going to go back to these value areas. Now, I know when I send out the charts, often I don't put them on there. I'm so used to looking at profiles that I can eye up value areas. I will try and make an effort to get those out to you. And the charts, a little bit more. It's a very time-consuming chore building all those charts every night. But I will, on occasion, I can't promise you I'll bring it out there every day, but most days I'll put these value areas in there. But the value areas, once you get an idea of momentum, let's just take this example here back. Okay, you've got a very, very high volume price here in the 10-year note future. Now, before I go any further, you see where I'm shading right here. Okay, what I have there are measurements of both length of range and width at the high volume price. How much time was spent at the high volume price? If I know what average is, and then as you can see that these bell curves are pretty, well, they're all very similar, okay, in length and width. But on occasion, you'll see one that's maybe a little too short and really wide. And you see under here where it says median width. Every one of these profiles, if I were to take the median width of all these profiles, it would say it's traded here in 30 half-hour periods during a week. Okay? That's the average. But in this one, it trades in 43. That tells me that the market's wound too tight and it's ready to rock. It means it's ready to run. So these are the kind of profiles that I look for. Listen, I used to be in the bond pits, and all I could trade was the bonds and the 10-year note. But now, because of screen trading, we can trade anything we want on earth, just about. So rather than try and make sense out of markets that don't make sense, so I don't trade bonds that much if I'm not getting a good signal on it. But if I see something like the short fat bell curve, or like this one over here too, the same thing. See how wide that is? Far above average. 42 ticks wide when the average is 30. That tells me this thing is ready. It's like a balloon getting ready to pop. So that's when you say, okay, man, this thing's going to go somewhere. Now I need a short-term signal to tell me that momentum's either bullish or bearish. And that's pretty much all I do, is I look for these patterns that tell me a story. When the market's wrapped too tight. Or, on the opposite, when a market's gone too far. Now, let me get back to the risk thing. Once I understand that I've got momentum, you see, this week opened up and it shot up on Monday, Tuesday, Wednesday it sat, Thursday, Friday, closed above the fair price. This market looks good. It's got bullish momentum. The last thing I want to do is see it trade. If it trades through the bottom of my value area, I'm long, I'm wrong on the trade. But you can see for weeks in a row, you trail a stop with this value area, and you are long. I mean, you're talking about a 4-point move in the 10-year note. You're talking about over $10,000 on a one lot. And your risk is defined and you're trailing a stop with it. Same is true when you're looking at a market going down. You're going to use the top of value as the market goes down to define your risk. So that's what you use the value areas for. Now there are other ways to define your risk, to take profits quicker and stuff like that. Absolutely. But again, that's not what this is for. That's more like a classroom scenario where we'll get through all that stuff. So we've talked about these things. So let's talk about timing. And I really already did. In this crude oil chart, I want you to note that this market typically would see about 29 ticks during a week, 29 half-hour periods traded at this price of, let's call it $13.05, or let's just, for round numbers, call it $113. And then you come in the next week, and it's doing it again. So now, within probably 4, 5, 6 days of trading, this market is wound real tight, making it ripe to run. Do I know which way it's going to go? No, I don't. I don't have a clue if it's going to break higher or if it's going to break lower. But what I do know is this is where I really start paying attention to my short-term signals. And I'm not going to tell you you have to be a profilist to do this. You could use whatever it is that you like for short-term signals. If it's some sort of a candlestick pattern or whatever it might be. It doesn't really matter what you use for a short-term signal. All I'm telling you is that I like to use my macrographs to tell me when I should be expecting. I should let my short-term signals tell me what the heck to do. And, of course, it's just pure probabilities. Now, look now we've got the crude oil here that moved $20 in 1 week. And it averages about $5 a week range. That's my median range down here, you see. So what's bound to happen? Should I start getting short crude oil way down here? No, you've already seen a whole month range in 3 days. What are the odds that the trend's going to continue? Slim and none. All I'm talking about, people, is probabilities. I cannot predict anything, and I would never pretend to think that I can predict. In fact, I think prediction is a fallacy. But probability is fact. So if you can get all these elements, if you can understand and read price action, I think you'll be able to make some pretty good bets. You know, just while we're on it, I want to show you one thing. You see this little low volume area right here? No volume trade there. We spent no time there. I want you to know that these low volume areas that I call sprints or single prints, put them together, sprints, okay? When you revisit those, they tend to be outstanding support or resistance. So when you see my daily updates, believe me, I will point those out. They will be in there as a support or resistance level because they are maybe the most reliable support and resistance levels I've ever seen. And you know, and first looks back at high volume prices tend to give you that kind of stuff too. Entry points, and I'm just going to show you charts. I want you to just kind of look at this. Look at when the market comes back and visits the high volume price. How many times it reverses. Even on a Monday, here it did not, but it bounced off of one there. So I really pay attention to these high volume prices, you see it was a high for the week, high for another week, high for another week, high for 2 days here, or low for 2 days there. It just happens enough to say, okay, listen, and this is how I would use those. If I come in, let's say coming into this week, say, okay, we're up against the high volume price of the week. Am I getting any kind of a short-term signal? Are sellers operating? Are buyers operating? What are my short-term signals telling me? And I showed you early in the presentation the worksheets that I use. So when I see a pattern on my weekly and monthly charts, then I turn to those short-term ones to sort of get my answers. And that's how I build my daily bulletins, like I said. As far as profit, entry and exit is basically the same thing. You're going to look for support or resistance areas. However, one of the things I really like to do is I make these boxes here, and really the box is the median or the average length of a well, this is I believe a quarterly chart. The average length of a quarter, incidentally, I love looking at stocks and quarters. They track very, very well if you're trading individual stocks, and therefore you would think that the indexes should do that as well. And I believe they do. Anyway, so I make these boxes and go, okay, if this is the average length and this is the average width, and then you come up here on top and say, okay, listen, if this thing catches a bid at the bottom, at the high volume price, this is about how far it should go this quarter. I'm not saying it's going to happen all the time, but you always want to be sort of in there fighting and trying to figure out hey, momentum's still good. It's above the fair price for the week, the month, or the quarter, the month, the week, and the day still has positive momentum. Why should I be selling on it? Why should I be selling? It's still got another $3 or $4 left in it before it even comes near a week's range or a month's range. So it's really sort of learning how to read the price action and run with the probabilities, and that's really all I'm doing with these charts. And I try to convey that in my daily updates. If it were up to me, I mean, I write these daily updates for a lot of commodities, and there's many days I write them going, I don't have a clue, but I write in levels because I know, okay, well, I should expect some sort of reaction in the markets here. But if I feel very confident about something, and I try and put pictures in there that will tell us something, I'll let you know. I mean, I think I'm pretty good about telling people when this is a solid signal in a newsletter or a daily bulletin. But I just wanted you to know what's behind the daily bulletins and what's behind the charts, and that really by looking at Macrograph, I get this long-term perspective in 4 different time frames, and then I narrow it down into these 30-minute time frames that help me with to really get me in my timing and say, okay, I'm looking for some sort of signal. Is it here? Is it here? Boom, I get it, and then you go. Okay? So I hope that this really helps you understand a little bit about more what these crazy charts are telling you. I'd be more than welcome to answer any of your questions. Again, I don't want to take up too much time on a weekday for everybody, so I would rather you just email me questions, and I'll put them together, and we'll hold another webinar and go over maybe in a week or so. It just depends on how well I've explained this. The last chart, let's just go over this. I talk about patterns repeat in all time frames, and this is why when I had that epiphany, I thought, well, if the logic applies during the day, or if you wanted to break these down into 5-minute increments, the logic works the same. Okay? Patterns repeat in all time frames. It's our job to find the pattern that suits what we like. I really only like working with 3 or 4 patterns that I know over the years probably pay off 7 out of 10 times. And as you can see in this S&P, these are yearly profiles here, and each color in the profile here is shaded a different month. But the patterns are the same. You can be looking at a daily chart and see the same thing, or a weekly chart and see very similar patterns. Now, getting on to these patterns, because of all the years I've been doing this, almost 30 years now that I've been watching markets and writing about them, I've really spent most of my time on the broker side of the business, taking care of institutional clients. So I'm really new to sort of bringing this stuff out to the market with this charting program that I really hope to bring to market so people can make their own charts. I just don't have the capacity to do it yet, but it is something I plan on bringing out in the future. But in the meantime, what I've done is I've taken 3 or 4 of my most reliable patterns, and I've started working with a group of a CTA named Sean Shammy in Florida, and we put together these automated systems. So, and this is Sean's information here, and I know maybe a lot of you don't have the time to do all the trading that you want. Sean, I'm gonna unmute you. Are you there, Sean?
Yeah, I'm here.
Okay.
Yeah.
Sean, you want to tell them a little bit about what you do at PowerTrade?
Yeah, perfect. And thank you again for the introduction, and presentation was great. What we've basically done is we've linked John up with a number of different programmers and math quants, and a lot of people have been following his charts. He's got a lot of subscribers that follow this, but a lot of them, they do it, but they also want to have something that's a little bit different where, they may like to use this towards certain stocks or bonds or whatever it may be, but they also say, you know what, I'd also like to see what his product can actually do for my portfolio. So we plug these systems into individual investors' portfolios. John's worked very closely with some of our programmers and developers and math quants to get everything automated so that individual investors don't need to take up any of their time. They can follow their macrograph charts and make their own decisions on whatever markets they wish to trade. Meanwhile, they can also have John's tailored program that he built plugged into their own portfolio. So if anyone has any questions on that, my contact information is there. You can email invest@powertradeinternational.com or call us directly for international customers. We have the +1 954 number there. A live representative should be able to get to you anytime. So again, if anyone has any questions on how we can get these 100% automated systems into your portfolio, don't hesitate to call myself or email myself or contact John.
Okay, thanks, Sean. I appreciate that. And for all you attendees tonight, thanks for coming. And like I said, please send any questions you have, and I'll do my best to get back to you as quickly as possible. And look for emails from me. So
we did get one question, John, that I think maybe you want to answer.
Oh, okay, go ahead.
One of the questions was, can this be done on any market?
Yes, as a matter of fact. You know what, guys? I guess we got a couple seconds here. Let me turn this show off, and let me just show you some of the things that I made some charts earlier. Let me get a couple up for you. I'm gonna look at that. Okay. This is a bean chart, and this is actually as of yesterday, okay? But again, here's a pattern that I just absolutely love. When you see how this bean chart was too tight, like I said, guys, I'm doing this on every market. I'm doing it on ETFs, indexes. The ETFs track really well. I really do. I just go through just tons of different time frames. I mean, I'll give you a good example of what it looks like, what I'll do on a weekend. I know it sounds like I don't do anything. I do golf, but I'm making all these charts, weeks and months, and I do play golf, guys, believe it or not. But I do generate all these charts, and they're weeks, months, and quarters. I go through them. Here's a little look at Apple. And this is Apple by quarter. Look at how nicely that thing's been tracking. I guess right here, somewhere around here, it might have had you get out of a trade. But overall, that thing's been running pretty hot. And it's still, I mean, I'd say it had to get below 405 before it was below the fair price from the fourth quarter to tell me that the market's even shifted into neutral. And it may have done that yesterday. Or no, I'm sorry, it did not. It was up around 418 or something yesterday. I did not check it today. So I mean, I just do these searches all the time, just looking for patterns that really. Oh, here's a good one here. I thought. Take a look at silver. Look at this on a quarterly basis. How tight it got up in this area up here. And how overbought the market got. I mean, you're talking about a market that, It's just after coiling up really tight here and exploding, it has a far above average move. And actually I was on CNBC with Rick Santelli talking to him about gold, and silver's much the same way, that it really is in dire need of a coiling pattern that it may very well be in for quite a while, a year or two maybe. Well, I'll give it 6 months. Like I said, I don't like to really predict. I more or less like to react. But this is what I do, guys. And if the question is, can you read these markets with any market apps, or read markets with this tool? Absolutely. Let's look at a currency real quick. This is the Mexican peso. That one tracked really well for me. Man, I mean, right up here, this market's telling me it's ready to do something. I don't know. It could have exploded higher. It could have exploded lower. But if I see one of those sprints, those single prints things, or a seller below value in the first hour of the day, that's a signal I like to use, those kind of things. So, yes, it does track very well, fellas. And, again, I'm open for questions, just not on this channel. So I'm gonna have to finish it up here. And, again, I thank you, and hope to hear from you.